Welcome to another episode of Millennial Investing Explained. Here's today's question. There's a lot of debate out there whether individual investors should pick specific stocks themselves or if they should just buy an ETF and diversify their money and just let it compound over the long term. Being an individual stock picker yourself, Stig, what do you think about millennials picking their own stocks?
This is such a great question, and it's also a very complicated question to respond to because I think that whenever we start out investing, very often we think about, hey, I'm really happy about, Starbucks, or I noticed how many people go to Starbucks all the time. I'll probably go in and invest in that company because it seems like they're running a really smooth business. There's a lot more to be said, obviously, than that whenever it comes to stock investing. But I think a lot of us have this idea that we should buy individual stocks, typically in brands that we know and we can identify with. And I'm not saying that is a bad way of looking at stock investing to begin with, but I think that there might be a few other steps you need to take before you make that consideration. Really, to answer your question, I do think individual stock picking is great. However, if you are just starting out, I would rather recommend that you start with a so-called ETF. For instance, an ETF that can track the stock market. Because as much as stock picking is a skill, perhaps the most important skill whenever it comes to investing is learn how to control your emotions. And that is a lot easier to do if you own a low-cost investment vehicle that tracks 100 of stocks. And it might sound counterintuitive, like why would there be any difference between losing 10% of your portfolio if you own just one stock compared to owning the entire stock market, for instance, through an ETF? Really, based on experience, emotionally it can be surprisingly challenging because rather than only considering your own profit or loss from investments, it's so hard whenever you do that not to help compare yourself to the performance of other investors. Losing money is really a part of investing, and the best way to train yourself, if and really only if you want to pick individual stocks, is to first learn to cope with loss in general.
I think you make a great point there, Stig, because new investors need to make sure that they're not getting discouraged early on in their investing career. I think that's very important because investing is a long-term game. If you buy an individual stock and it goes down in value, you might feel like a failure and you might get discouraged and then you might not want to invest anymore. Whereas if you buy an ETF and then that goes down in value or the market goes down, now you're not the only one and you don't have to put the blame on yourself. You know that other people owning this ETF made the same decision as you and you're not alone. So it's not your fault per se. And hopefully because you can realize that you didn't make a bad pick, you won't get discouraged and you'll still be confident in investing and allow you to continue to invest for the long term in your future. Like I said, I think it's extremely important for millennials to not get discouraged early and so that they can continue to invest for the long term. The biggest benefit that millennials have is time. For myself included, time is the biggest thing on our side when it comes to investing. And if you get discouraged early on and you don't take advantage of the time, you're really going to be hurting yourself over the long term.
Yeah, it's kind of weird. You have a different emotional attachment whenever you own single stocks. Like you can almost be, mad at Starbucks or be mad at whatever kind of brand that you're invested in. Whereas it's different with the stock market. It just seems like it's not your personal failure in a way, that if you specifically picked this company and then they're not performing well. Because at the end of the day, the stock doesn't care that you own it. And it's weird. You feel like this attachment, I bought this stock for $20. It should go up. The stock doesn't know that. The stock doesn't know you bought it for $20. It doesn't know how you feel about their Frappuccino or whatnot. It's difficult to control your emotions, which is why we emphasize so much, like, learn how to lose for a small amount of money, and generally do that with the entire stock market and not with specific individual stocks.
Yeah, that's right, Stig. I agree completely. That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.